All right, before we jump into this video, I want to let you guys know if you want first access to the EzSMC indicator, click the first link in the description below. It's absolutely free. All you have to do is answer one question, and there's going to be an opt-in for your email, and we're going to send you the PineScript code absolutely free. If you're new here and you don't know what happened, essentially TradingView took down our SMC indicators. So if we can't upload it to TradingView, we might as well give it away for free. So click the first link in the description below, and I'll see you guys inside. EzSMC is officially live and it's absolutely free. As you guys just saw in that little clip to open up this video, all you have to do is click the first link in the description below, enter your email, and then we're going to send you the script for this indicator. It's going to be yours absolutely free forever. Think of this as a way of giving back to the community. But in this video, I'm going to go over exactly what this indicator entails, how you can use it, what smart money concepts is for those of you that don't know, and some effective trading methods using this indicator. So we're going to go through input by input and break down what each one is, some customization features, and then finally putting it all together so you can use this starting today. All right, first things first, if you don't have the slightest idea of what smart money concepts are, I would recommend watching some other YouTuber besides me. Reason being is I don't feel qualified to teach you guys the in and outs of smart money trading, although I think I have a pretty good idea. I don't use all of these concepts in my day-to-day trading. In fact, I'm mainly a retail trader, right? I use key fibs, I use support and resistance. That's what's worked for me since I started trading, so I've stuck to that. I'm not going to change what I'm doing just to kind of cater towards one trading method that's popular right now. But I know a ton of you guys have had success trading smart money concepts. So let's go through the settings here and I'll show you guys what's up with this new indicator. So to start, we have order blocks, right? That is what these gray boxes with the volume and the percent are right over here. So an order block is an area on the chart where buyers or sellers enter the market and push price down. Now, for an order block to be valid, according to my strategy and most of the strategies inside the Discord, you need to see displacement, aka a fair value gap, as you can see right here. That will constitute what is a valid order block as opposed to a non-valid order block. And we've also kind of coded that into these order blocks to give you guys only the strongest and the valid order blocks on your chart. And of course, seeing the volume helps as well. Now, I've kind of customized these settings a little bit, and I'll go through each one here so you can do the same. This is a setup that I personally use when I'm trading using this indicator. So obviously we have the order blocks, we have the internal and external. Just leave it on all. I really don't think it matters that much. We also have a time frame toggle and a multi-time frame toggle. So this is very helpful if you're entering on, let's say, a 1 minute to 5 minute, and you want to make sure that price is at a higher time frame order block or key level. We have the multi-time frame feature here for you guys as well. Now we also have a mitigation method. So this will dictate when the order block is mitigated or not. I'd recommend leaving this on wicks or touch, right? If a price wicks through an order block, to me, that is mitigated. Even the 50% point, which would be the average, that's when an order block is mitigated because now you are filling all the orders that didn't get filled down at the order block. So like I said, big buyers and sellers or institutions are placing their bids and then moving the price down in one direction. But since these institutions are trading with so much money, right, we think of a lot of money as maybe $1,000, $10,000. Well, some of these players are entering with literally hundreds of millions of dollars with leverage included. So obviously not all of their orders are going to be filled. There's not enough liquidity, right? So they'll push the price down in an impulse move up or down, and not all of their orders will get filled. So as soon as price comes back up to these levels, gets their orders filled, that is when the order block is mitigated because the institution's orders have been filled. Now you can't use that order block because it has been successfully mitigated. So I'd recommend leaving the mitigation method on wicks or touch. As soon as an order block is touched, it would be mitigated. By default, I think it's wicks. You can leave it on that. We have a max order block feature. I like keeping this on 10. If you only want to focus on the current structure, which is something we teach inside of the Discord, you can set it to 5 if you'd like. But really, I like setting the max order blocks to 10, right? Because as you can see, now there's no order block here, even though we just tapped off of it. So keep the max order blocks at 10. You also can extend if you'd like. I don't personally like extending the order blocks. I think it looks a little bit weird. So personally, I'll turn that off. Like I said, we have the volume and percentage, which is very helpful to tell you where the strongest order blocks are with the most institutional volume. So I'll keep that on. We have the midline, of course. And then, like I said, we have the multi-time frame order blocks, which is the same thing. If you want to turn the volume and percentage off, by the way, maybe you don't use that, you can toggle that off very easily as well. All right, going down to market structure. Now, market structure is extremely important, especially when you're trading with order blocks, because if you're not trading market structure correctly, you can really get burned, right? You don't want to set blind limit orders at these order blocks. You're kind of asking for a disaster. You really want to make sure you understand market structure. Now, there's so many videos on YouTube talking about market structure. I'll get into the basics very, very briefly here. Very simple concept to understand, right? When you're in an uptrend, you're going to see higher highs and higher lows with a continuous break of structure to the upside, right? Break of structure right here, and then break of structure right here, until there's a market structure shift where you close below that last swing low, and that is where you look for a short at this order block right here, maybe fair value gap, and look to short the market downwards, creating another break of structure to the downside. So it does a great job of showing you the overall trend of the market. Now, for example, right, if I'm on GBP USD on the 2-hour time frame, I can see we had a market structure shift to the downside with a strong move leaving behind an order block and displacement. This would be a great short opportunity right here. As soon as price comes back up to this fair value gap, that is where you'd enter your short position, and you'd be targeting probably the sell side liquidity around here, right? Maybe depending on your strategy, if you're entering on the fair value gap, you might put your stop loss right here. If it comes up, maybe enter another short here at this order block. I always recommend going to a lower time frame and looking for other confluences, some bearish confluences when price reaches this level. Again, we have the multi-time frame order blocks. So if you want to go down to a 5-minute for entry, looking for some sort of double top, maybe bearish divergence, whatever your strategy is, you can do that using the higher time frame order blocks. Unfortunately, this did not hit our entry, but this would have been a good example for a short position. All right, let's keep going down. We have the equal highs and lows. Again, this essentially just shows stop hunts and liquidity in the market. However, since we have our liquidity levels, which I'll get into in 1 second, I don't find this particularly useful. We also have the swing points, right, showing you the lower high, lower low, higher low, etc. Again, I think it's pretty easy to spot with your own eyes. I don't think you need an indicator to tell you where the swing points are, but for the new traders, that's there as an option. All right, next we have our fair value gaps, right? I'm super excited about our fair value gaps. We probably have some of the most unique fair value gaps on the market, and we also have a lot of customization. So we have a filter and a max width. So if you only want to see the biggest fair value gaps, you can change this width to, let's say, 2, maybe 2.5, and it will get rid of these smaller fair value gaps, which is a great added addition. We also have that as multi-time frame with a mitigation method as well. For the fair value gaps, mitigation method is going to be touch or average, right? As soon as price touches this fair value gap, that is mitigated in my opinion, right? Because you're picking up all of those orders that are left behind, leaving this gap. A fair value gap is when the equilibrium of buyers and sellers is kind of thrown off course, right? There's so many sellers or buyers, depending on, which direction the fair value gap is, that it leaves behind a gap in the market where there are still institutional orders. So if you see a strong move with displacement, with a fair value gap, with an order block, with a market structure shift, you know that there's going to be a good setup for a short at around those levels. So our fair value gaps are definitely top of the line. We do have an option to extend them to the current price action as well, but I'll just untoggle that for now. All right, below that we have the liquidity levels. Now this is probably one of my favorite additions to the indicator, right? Our liquidity levels. This will show you levels on the chart where liquidity is left behind. You can clearly identify where the buyers and the sellers are in the market. Now again, if I'm on GBP USD, I can see we had a break of structure on the external to the upside, telling me that longs are valid. So I'm going to wait for a displacement, right? A strong move with displacement, which we actually got right here. I believe this was already an order block from this candle, but we already tapped into that and saw a reaction up. And now we're grabbing all of this sell side liquidity, right? We're grabbing all of the sell side liquidity, tagging into this order block, and you can see that we're currently bouncing. So maybe you want to go down to a 5-minute time frame, look for some bullish confluences to enter that trade. Now this indicator does work on all time frames. Obviously you want to use higher time frame levels, higher time frame order blocks when you're trading, no matter what time frame you're entering on. You can also change the pivot length if you want to show more levels, right? Showing the buy side liquidity and sell side liquidity over here. You could do that as well, increase the pivot length to 10. Personally, I like to focus on the current structure, so I'll keep that a little bit lower. I'll keep it on 8. We have the max levels as well, and also an option to extend it if you want the liquidity levels going through your entire chart. All right, moving on to the key levels. Now these are pretty self-explanatory. Shows you 4-hour open, daily open, Monday range, etc. I know these levels are are part of a lot of you guys' strategies. So you can simply toggle these on. For example, I'll toggle on the weekly levels and you can see that we have the weekly open, previous week high and previous week low. This is just another added confluence to help you guys find entries. And below that, we have the session levels as well, which is very helpful, especially for my Forex traders, even my NASDAQ traders, right? These session levels can be very, very useful. I think that's pretty self-explanatory. And this indicator does work across all assets, right? I'm on Bitcoin USDT here on the 8-hour time frame. You can see we perfectly came in, grabbed that buy side liquidity. We saw a strong move down with displacement. This would be a nice entry for a short position as price approaches this order block, stop loss above the swing high, of course going to a lower time frame, looking for more confluences. And I can also see a nice buy opportunity, right at this fair value gap. Now, another added confluence I like to use is the key fib, right? So I see that we have a 0.5, aka mid-range, overlapping that fair value gap, which would be a nice long entry right around here. Now, another added confluence I like to use with the SMC is the Easy Oscillator. The Easy Oscillator is part of our paid indicator bundle that comes with Easy Algo 2.0. As you can see, we have real-time bullish and bearish divergences, buy and sell dots in the overbought and oversold zones, as well as the volume. So this definitely helps as well. We've also added a few more analysts into the Pro Discord as well as Signal. So we're really giving as much value as possible inside the Pro Discord. I highly recommend, if you guys aren't in, get in the Pro Discord. It'll be the second link in the description below. Now, if you want to install the EzSMC, we actually have a full PDF tutorial inside of the SMC indicator channel. So I'll also leave the link to the Discord in the description below. Join the Discord, go to the free channel, it's called SMC Indicator, and you'll see the guide on how to get it set up. It takes about a minute or so. All you have to do is come up here to indicators, my scripts, and then copy and paste the code, and you'll have the EzSMC forever. If you guys find value from the SMC indicator, feel free to donate to our USDT TRC20 address. 100% of the funds will be donated to Best Friends Animal Society, which is a non-profit organization to help rescue and shelter homeless animals. So it's going to a good cause. We're not pocketing any of it. That's it for me. I'll see you guys next video.